So there's an age-old argument about whether or not with your stock investing you should chase after pure growth or high-yield dividend payments for income. It depends on where you're at with your own goals and what your goals are, and that could relate to your age or what you need your investments for. But if you've been watching my channel before, or if you haven't, you might know or might not know that I talk about a lot about dividend stocks. And I'm always tracking my portfolio, which currently has around $74,000 in it. And I'm always focused on my dividend income, which at the moment is about $2,800 per year, which is awesome. But I'm not actually using this income at the moment. I'm actually reinvesting all of it. And pretty much at this point in my life, my goal is to increase my total gains, or have the biggest possible gain, while still having some dividend income as backup in case I need it. Now, for context, I'm in my 30s, and so I have about 30 more years or so until retirement, and I think the goal with this portfolio is to not withdraw any money until retirement, and in retirement, I plan to live off of my dividends. Now, currently my average dividend yield is about 3.78%, so that's like the weighted average for the whole portfolio, which I think is good. This, for me, I find to be a nice amount where the stocks that give the dividends still grow pretty decently. You can get like stocks like a pure growth stock, for example, like Facebook or Shopify or something like that, which will have no dividend and a very high potential for upside, and as you've seen recently, downside as well. But I also like having stocks that grow that also pay a dividend, because that's just awesome. I'm going to make 3.78% on my investment pretty much no matter what. Assuming, irregardless of what the stock price does. And generally, the stocks that I hold are safe blue chip dividend companies that slowly grow, so I can kind of add the growth to the dividend payment, and then I'm looking at my overall returns. So it's important to notice here so far, I've been doing this for about a year and a half, and if we look at all of the dividends I've received so far, it's about $1,800, and my total gain is about $8,300. So if we just divide those, maybe we can have a little cell here where we just have this divided by this. That's going to show us, if you want to format that even as a percent, that 22% of all of my gains, basically in the whole portfolio, have come from dividends, and about 78% of my gains have come from the actual increase in stock price. So right there, that's an indication to me that also dividends are not the biggest source of growth in my overall portfolio. And that's totally okay, they're just part of it. And this is backup. So if I ever had a problem in my life or something like that and I needed cash, I know at the moment I have about $230 every month that's going to be available to me in cash flow for emergencies. But until I need it, I'm just reinvesting it. And basically what my plan to do is, when I reach retirement, when I decide that I want to start living off of the dividends, I'm totally going to shift my portfolio around, and I'm probably going to sell off a lot of my individual stocks that have low yields, but maybe a higher growth potential in the next 30 years. And I'll take that money and I'll probably buy stocks that have a higher yield, something maybe like 5% or 6% or something in there. I don't really know. I haven't decided on the exact number yet, but basically I will be planning to sell my lower stocks, my lower yielding stocks, for higher yielding stocks in the future, to trade off that growth and increase my annual income when I'm actually planning to draw the recurring passive income from the dividends. In my head right now, as a guy that's somewhere in his 30s, I'm thinking that at that time, 5 to 6% might be kind of nice, because I still find stocks that have 5 to 6% dividends still like to grow, so it seems super safe to me compared to those ones that are like 10% or more. But I have about 30 years to think about that, so I'm in no actual rush to worry about the exact mechanics of what I'm going to do when I retire. I think the point is to have the biggest possible amount in my portfolio. So if you imagine I have like $1 million or something when I retire, and I'm taking, I change it around, so now I have a 5% yield, and I'm living off the dividend, well then that's $50,000 per year that I can live off. If it was 6%, that would be 60%, you get the idea. If I just left it at this, I would be living off of a smaller cash flow, but the principal might still be growing, and it's potato, but I think that's the general idea. If we look in the portfolio at some of the individual stocks, I think it's important to notice here as well, because of my own personal goal of growing the total gain of the portfolio right now, until I change my focus in retirement, is that I'm not chasing the highest possible yielding stocks, and it's kind of working. So I've sorted it here right now to have the biggest gains by percent at the top. And as we scroll down, we can see that the biggest gains, the gains get smaller and smaller until they're in the red, and then I am experiencing losses. But what I want to mention here is if we look at my biggest gains and then compare that to the dividend yield that these stocks are paying out, you'll see some of my highest performing stocks overall have yields below 5%. They're around 3% or 1%. Okay, there's one in here that has 5%, but these guys are just on a rampage right now. I don't know why they're doing so well. But generally, my biggest gains in my portfolio are coming from relatively low dividend yield stocks. So if I was just chasing, high dividend yield stocks, paying 10% or 12% or something like that, I might not be up 30% or 20% on those positions. Of course, it depends when I bought them and how long I held them for and all that stuff. But for me, so far, I'm noticing that, my biggest gains here are coming from, stocks with modest yields and really strong stocks, typically. A lot of blue chip dividend, Canadian dividend aristocrats type stocks. And I'll just focus in maybe on a few different examples in here, like for example, Waste Connections. This is a really good stock. It's up 12%. They have a super strong history of growth. If we can even look at their spark line. Let's look for it here. It's Waste Connections. And they just go up and up and up. And that's pretty much what I want. If this could continue for like 30 years, that's awesome, because the growth that they're experiencing is going to significantly outpace their tiny yield of 0.59%. And for example, if I held onto this company for a long, long time, in like 30 years or something, which I may or may not do, I don't know yet, in retirement, there's no way I'm going to hold this stock and live off of a 0.59% yield. I'm going to sell out this entire position, which is going to be hopefully like double or triple or quadruple times its size, based on what I put into it, and then switch that out for a company like, I don't know, for example, Bell, where Bell is paying 5%, and their overall stock price is not going down over time. They actually grow a little bit too. So that would be like a typical move that I think I'm going to make in retirement. So one could argue that maybe the way that I'm doing this is that I should be more focused on like really extreme growth companies like Facebook, Shopify, that kind of stuff with way higher potentials, or Apple, something like that. So far, I just haven't been into it. I do like the fact that all of my positions do pay a dividend, and I have that safety blanket or that little bit of security in case I need the cash flow within the next 30 years. And of course, maybe I'm trading off some potential upside. I'll never know. So far, what I'm doing, I'm comfortable with, and I think that's an important thing to do as well. If you are self-guiding your own investments, to be comfortable with what you're doing and the decisions that you make. And if you just go put all your money into Shopify a month ago because you wanted to ride the wave up and now you've lost most of your money, you do have to be very careful, because you can get a lot of money and you can lose a lot of money in the stock market as well. So my sort of strategy is totally within my risk tolerance. I'm pretty happy with the way things are going. And I think it's important to just chat about why I'm doing what I'm doing, because I'm always, every time when I make these my portfolio update videos, I'm focusing here on my growing dividend income. But to be honest, within the next 30 years, like I said, it's not the most significant number. It's super cool to see. It's super motivating to see. And it makes that nice security blanket, but it's not everything. And if you are into dividends, it's helpful to think a little bit about what your actual goal is and how you're going to get there. So guys, thanks a lot for watching, and maybe let me know down in the comments, what is your goal? Are you income focused? Are you growth focused? Are you into dividend growth or something else? I'd love to hear it. So I'll see you guys down in the comments and the next video.